it is the closing bell on Wall Street there. You just had it for the week that was. Well, now it's official. That really was the closing bell on Wall Street. We are done for this Friday here. A little bit of a mixed market, some interesting action yet again here. We've had these days when we've opened lower. We've been able to retrace our steps. Today, it looks like we will end in the green across the board with the Russell, the big outperformer here. Crude continuing its gains. Crude very close to that $30 level that Jared Blickery has been talking about. Gold, silver higher today as well. The big news, though, is economic, and that came this morning with the retail sales number just showing the absolute destruction that we've had from consumers pulling back their spending here. That also followed by what we heard from the Fed in terms of manufacturing data as well. So the economic data continues to be bad, and yet we are seeing markets higher here. This has been a trend that we've been talking about day in and day out, the split really between the economy and the data we're getting and the stock market. I want to bring in my co-host, Myles Udland, who's wearing a different shirt. I don't know what that means. Maybe this is a different trend for the market now. Maybe I don't know if this is a bottom calling or what's happening, but Myles, what do you make of the action today?
Well, it's almost summer here in New York, so it's sitting right next to the air conditioning. It's 80 degrees outside, so I had to get rid of the sleeves for summer. I'm not going to sit in here and bake for the next 3 months before we go back to the studio. Looking at today's market, I mean, I think in a way you look at the retail sales number and you could almost say, I'm glad it was so bad because it's going to be really difficult for things to get progressively worse. And what is the market's central call right now? I mean, I don't really think the market is pricing in a V-shaped recovery, but I think what the market is absolutely ruling on is that the bottom is in for economic data. Things won't get increasingly worse from here. And if you go down some of the declines we saw in the retail sector, clothing sales down almost 80% in a month. And granted, most people who were able to work from home did work from home and most stores were closed, but that is essentially the entire apparel industry stopping, revenue going to almost zero for many, many, many retailers. So yes, it would be very difficult for things to be worse than that. And given the way regulations have gone on a state-by-state basis, it's not going to get worse than that. And I think, so the retail sales number affirms, I guess, what the market has been kind of saying about the economy right now. But, okay, we had a higher market today and yesterday, but let's go back in time a couple of sessions. Monday, Tuesday, Wednesday were very rough days in this market, especially Tuesday into the close. And with the VIX settling here on a weekly basis back above 30, I know it's not a huge move. I think that the settled nature of how people said, great, the market bottomed and now we'll just grind back towards some high. That period, I think, is over. I think the market is now very clearly in a new, more volatile phase. There's going to be a lot of anxiety, I suspect, into the heart of the summer around what happens in Congress. Do we get another version of the CARES Act? So I think in many ways, everything we learned this week is logically consistent with how the market has behaved. But this week was a reminder that there's a very, very long way to go in this period.
So Rick Newman, to Myles' point there, we don't know if the market's bottom, but people are starting to talk about the fact that maybe the economic data has bottomed. This retail sales number is the worst that we've had since they started keeping track. And I was kind of surprised when they started keeping track, early 1990s on the retail sales number, but it might have bottomed. I've been reading right before Mother's Day. It could not possibly get worse than this, right? As we start to open, does the idea that the consumer pulling back their wallet, we have seen the worst of that, hold water?
Well, I feel it's my duty to bum everybody out, Jen. Yeah, I think it could get worse. I talked about this the other day. We hear a lot. We've heard this phrase, in the rearview mirror, the worst is in the rearview mirror. I think that misunderstands or misapprehends the situation. I feel like what's happened here is this giant tidal wave has hit the boat and filled it up with water about halfway. And we're probably not going to get another tidal wave like that. but we're going to get some smaller waves that keep filling the boat with water as we keep trying to bail the water out with stimulus and all the other things we've been talking about every minute of every day. So I think this leaky boat we're in, or this overgone boat we're in, I think this is just going to bob around for possibly for months. And I think that we're going to definitely see some reversals in the reopenings. That seems inevitable. I just don't think it's going to be as fast as anybody thinks. Most economists, there are very few saying look for a V-shaped recovery. The consensus, if there is any, seems to be for a swoosh recovery, which is kind of a long, slow climb out of the bottom.